Today we are talking about stocks because, well, everyone keeps DMing me asking me what to invest in. So in today's video, I'm talking about the best 11 stocks that you can put your money into, whether that's $1,000 or $10,000, and kind of just forget about it because those stocks will keep making you money. I own every single stock I talk about in this video, so I'm not just talking about some stocks I don't own. I actually have money in these companies myself, and I plan to put at least another $10,000 into each one in the next few months. So I'll show you a breakdown of what these stocks are and why I picked them. And this is not some crazy stock analysis research video, right? But it will still get juicy. Don't worry though, it will be very easy and simple to follow along. So even if you're a beginner, this is perfect for you. With all that said, here is a list of the stocks I would invest in if I had $1,000 and I could not change my mind. Let's go. Number 11 you'll want to hold for life is Google. We all know what Google is. Google is just unreal. You literally just made Google money right now by watching the ad that played before this video, which they're still not giving me a cut for, by the way, because I'm not monetized. So I'd really appreciate it if you watch the video till the end. And Google pretty much controls the entire search engine universe via, Google, their search engine, and online video through YouTube. For context, there are about 2 billion people who use YouTube, and that's around 25% of the whole world population. That is insane. As more and more people are turning to their mobile devices and moving away from desktops, Google's operating system Android has become even more valuable, with about 70% of the world's market share. So that's a big market share to have. They reported a sales revenue of $74.5 billion in 2015, and in 2020 they reported $102.5 billion in revenue. Do you realize how insane that growth is? That translates to 145% revenue growth over 5 years. Remember, this is billions we're talking about. Most companies can't even make millions, and this company is growing in billions. It's also sitting on a ton of cash, 135 billion to be specific, so they aren't going anywhere anytime soon. And it also became the 4th company to have a market cap of more than 1 trillion. So pretty massive. In 5 to 10 years from now, you're gonna look back and you're gonna wish you owned Google stock. Number 10 is PayPal. More and more people are buying things online, and we are slowly moving into a cashless society. The pandemic only accelerated that transition, and PayPal definitely benefited from it. I mean, I can't even remember when I used cash last time, can you? A MasterCard survey found that 71% of consumers expect to use cash for transactions less often in the future. So that plays right into the hands of PayPal, right? It's very good for them because they are a digital payment company. Since the end of 2017, transactions per account have climbed from 33.5 to 43.5 as of the second quarter of 2021. So basically, people are using PayPal more and more, and this is likely to keep increasing because there is a lot of room to grow. Also, PayPal is constantly innovating, and that is why the revenue and cash flow has consistently increased over the past few years. To elaborate, they've recently introduced crypto trading and a buy now, pay later option, and there is potential for adding the ability to trade stocks from within the app as well, which could significantly grow engagement. So PayPal could grow a lot from here with everything they have going on, and the stock delivered a massive return of 640% over the last 5 years. Oh, and did I mention they own Venmo and Honey? Number 9 is Amazon. They sell everything, literally everything. Amazon has changed everyone's lives and just made it easier. They have solved so many problems, and that is why Amazon is the world's largest e-commerce company. As one of the fastest growing companies globally, it has produced a 400% share price growth over the past 5 years alone. That's insane, right? And during the pandemic, Amazon could safely deliver all the necessities needed to your doorstep, such as groceries. So meeting increased COVID-19 related demand allowed them to grow much faster than people thought. Like, if COVID couldn't bring them down, nothing will bring them down, except maybe the government with the antitrust laws. The thing is, they don't just sell things online. They also focus on things like cloud computing, artificial intelligence, and digital streaming. They bought Twitch. Because of these diversified target markets, it can continue to remain relevant for years to come. So it's a really good investment. I would literally put all my money into this if I could, but you gotta diversify because investing in one company is very, very risky. Number 8 is Coca-Cola. Warren Buffett is one of the biggest fans of Coca-Cola. Man drinks like 5 cans a day. I don't even know how he's still alive. Maybe Coke is good for you. And Coca-Cola is a staple, and you just gotta own it. It's over 130 years old, and it currently represents Buffett's 3rd largest stock holding, valued at 19.7 billion. So if the greatest investor in the world is holding it, it's probably for a reason. Also, they're currently planning on buying a company to overtake Gatorade as a market leader in the sports drink arena by 2025, so that should be really good for them as well. They've also paid dividends for 58 years in a row, but I will say though, due to the worldwide pandemic, Coca-Cola has seen disruptions in its supply chain, which has put pressure on them. and with every restaurant and venue closing down, a drop in sales was somewhat inevitable. But not all is lost. With vaccines rolling out and life kind of getting back to normal, consumption rates of Coke will begin to increase, so we can look forward to consistent growth again, and investors can, have confidence that it will grow and be a good long-term stock. Number 7 is McDonald's. McDonald's needs no introduction, and it's another company that has been around for a long time, more than 65 years to be specific, and it's grown into a whopper of a business. Sorry, that was a bad joke. It's the world's biggest food service retailer, and it has almost 40,000 locations all around the world. Most of McDonald's restaurants are franchises, with the company owning and operating relatively few of its own. So this is a very appealing business model because it means the company doesn't have to buy, rent, staff, and maintain tens of thousands of locations. Instead, it can collect payments from franchisors. So it's a much leaner and less capital intensive business model, which is why it's so good. One underappreciated aspect of McDonald's is that along with being a fast food chain, it's also a real estate business. It has bought many thousands of locations for its restaurants, and it rents them out to franchisees and makes massive amounts of money that way. McDonald's is also a dividend payer, with its payout recently yielding 2.15%. By the way, if you don't know what dividends are, they're just profits that are shared with you for holding the stock. Some dividend income is great to have because healthy and growing companies will tend to keep paying shareholders no matter how the economy is doing. If you're planning on investing and you've learned something from the video, make sure to smash that like button and subscribe for more videos like this. Number 6 is Facebook. I actually recently bought some Facebook shares, and I'll definitely be investing more into them. I do have some issues with social media as a whole because we are still understanding the effects of social media on our mental health. But then on the other hand, Facebook is an amazing platform to keep track of friends and family. Regardless, they are going to make an insane amount of money, so might as well make some money with them. Also, they own Instagram, WhatsApp, and Oculus, so they do have a lot going for them. And they had a lot come at them, but despite everything, they've continued to do well as a business and increase their cash flow and revenues. A lot of businesses have been built through Facebook. More than 10 million businesses advertise on Facebook to connect to relevant consumers. Daily active users of Facebook have increased to 1.845 billion from the previous quarter of 1.82 billion. They're still growing, and when including all of its platforms, Facebook is now home to over 2.8 billion monthly active users. And Facebook is very profitable, and they will continue to make massive amounts of money, so it's definitely a good long-term stock to hold. Number 5 is Disney. Disney is not even a brand, it's a lifestyle. Like, everyone's childhood had Disney in it in some sort of way. They've been around for so many decades, and they continue to show strong growth. Diversification has been key with Disney. They own a variety of platforms and companies that continue to bring in revenue outside of its core business. They own Marvel, Star Wars, Pixar, and more. And I almost forgot about Disney Plus. Disney Plus is its streaming service that provides exclusive content for its subscribers. The numbers for that have grown extremely fast, and it now has over 146 million paid subscribers. In its first quarter alone, it was able to attract 95 million paying customers. So pretty big growth. And long-term goals include reaching 250 million subscribers by 2024, and I think they're gonna do it. Even with COVID-19 forcing its core attractions and parks to close, Disney is bouncing back as vaccines have been rolled out. Ultimately, a huge company like Disney that has been innovating for years is not going anywhere anytime soon, so it's a good long-term hold for sure. Number 4 is Microsoft. Microsoft is one more company you should be comfortable aiming to hold for decades. Like some of the other companies here, it has also been around a long time. It was founded in 1975, but it's different from some of the old companies in the sense that it has had to do a lot of innovating to keep up with competition. It began with personal computers and the Windows operating system, which I'm sure most of you are on. I sure am. Today, it has a wide variety of products such as its Microsoft 365 suite software, which includes Word, Excel, Outlook, and all that good stuff. They also have the Azure cloud computing service, its Xbox gaming platform, and the Windows operating system, so they have a lot under them. Microsoft's second quarter revenue grew 21% year over year, while their net income surged 47%, making it clear that despite its huge size, it can still grow rather quickly. Its stock rose more than 20% in the first half of this year alone. Of course, don't expect that growth every year, but it did do well this year. Its market cap recently just topped 2.2 trillion, and some people think it'll become more valuable than the next stock on this list. Number 3 is Apple. Apple is the most valuable company in the world, and it was the first to hit a 1 trillion market cap. Apple has all the qualities that long-term investors should look for in a stock. It has a loyal base of millions of customers. It generates loads of cash. They generated 95 billion in free cash flow over the last 4 quarters alone. So a lot of money. Above all, it has tremendous brand power and recognition. And when I say Apple, you think about them instead of the fruit, right? Like their marketing is just that good. Revenue increased 28% year over year through the first 3 quarters of fiscal 2021. That is such a massive number for how big the company is. They also started paying dividends 8 years ago, and they have been very consistent with them. What keeps Apple users from jumping ship to competitors' products is the software experience and how everything works together so well. That is why they've been able to compete so well in different categories. All of their apps and features like handoff, which allows a user to switch easily from an app on an iOS device to a Mac, makes Apple's devices work better together, which just gives the customers an extra reason to just stick with the company for all of their needs, right? Because everything just connects and it makes it just super easy to just buy everything from Apple. All of this combined with the continued growth of its higher margin services business makes Apple a solid investment. I would put all of my money here, but again, it would be too big of a risk. Number 2 is VOO. The truth is, when you start investing, you're gonna do what most people do, which is try to find the answer, try to find that one winning stock and try to find that best investment strategy that'll make you the most amount of money in the shortest amount of time. You'll probably spend a lot of money trying to learn, but just remember, if someone really knew how to make millions of dollars through trading, they wouldn't be selling those secrets. And if they knew, they probably wouldn't tell you. After a lot of money and time lost, you'll realize you only needed one thing. That one thing is this stock and maybe the next one as well. These are not individual stocks, but they are ETFs that track index funds. Basically, they're the same as index funds, except they can be traded like a stock, so that's why I included them on the list. When you invest in VOO, you're investing in the top 500 companies in the USA. Instead of putting all your eggs in one basket, you're diversifying and lowering your risk and investing in a basket full of stocks, which is what you are getting with VOO. Plus, it has averaged 10% in returns or 8% adjusted for inflation annually since its creation, which is better than most actively managed funds. So VOO is really all you need. And number 1 is VTI. Unlike VOO, which represents the top 500 companies in the USA, VTI represents the entire US stock market. Through one share, you get access to over 3,000 companies. If you consistently buy into these, then you'll do better than 99% of professional hedge fund managers, right? Meaning most people are not able to beat the market. Assuming around an 8% return, which is normal and very realistic from VOO or VTI, you can expect your money to double in 8 to 10 years. With the power of compound interest and doing this over the long term, you can become very wealthy simply by consistently investing in these. There's a reason that the richest investors like Warren Buffett are long-term investors. Just remember to be patient because compound interest works exponentially. And when you do become a millionaire, don't forget to come back and smash that like button and subscribe, or actually maybe do that now. And that's it for today. Until next time.